again, everybody, thank you for coming and joining this webinar. First of hopefully many, the inaugural Blockchain for Accountants webinar. We got some cool ideas that we think we're going to do with this going forward. But yeah, this is the first one. We're going to try to keep this one to 30 minutes. Hopefully leave some time at the end for some Q&A for you guys. But yeah, again, appreciate you all being here. And let me give you a little bit on my background before we get started. So I'm a CPA. I'm an accountant. I'm one of you guys. I've been in the trenches. Spent 10 years in public accounting working at EY and RSM and Laporte, which is a regional firm here in New Orleans. And I was a financial statement auditor for those 10 years. So hope any of you auditors out there are doing well during during this kind of coronavirus time, kind of working remotely. Hopefully your clients aren't giving you too much gruff. So, but I first got into blockchain in 2017 when everyone and their mom was pretty much buying Bitcoin. We got up to 20,000, Ferraris, Lambos, going to the moon, all that fun stuff. And we we're going to be, Bitcoin billionaires. Shout out to that book by Ben Mesrich, Bitcoin Billionaires. I haven't read it yet, but I've heard good things. So free plug for that if you guys are looking for something to read. So I was interested in blockchain when I got into it in 2017. I was interested really from the accounting aspect. Back in 2017, the Journal of Accountancy was like sending out their weekly e-newsletter that a lot of people would subscribe to. And the hot topic they would always point out was blockchain, crypto, how blockchain is going to transform accounting, how you really need to learn about this right now because it's this huge thing. So I figured if it was that important for the Journal of Accountancy to be pumping that info and kind of the AICPA and others, then I was like, all right, I guess I should kind of check out what this internet money thing is, what this blockchain stuff is, and just check it out. So I really kind of dove in then and did my research to truly understand what blockchain and cryptocurrency is and its potential future impacts on accounting. And that's when I discovered that I either need to become basically an industry expert within my firm or start my own crypto accounting company. And that's when I met the rest of my co-founders at Gilded. And we started Gilded. So this was in towards the end of 2018. And at Gilded, we're currently creating the infrastructure for businesses to be able to utilize digital currency and reap its benefits of faster, cheaper, and more transparent transactions compared to traditional payment rails. So that's a little bit on me and my background. For the format of today's webinar, I'm going to keep it relatively high level. Since we have people on here with kind of all sorts of backgrounds, either crypto newbies or obviously some experts. I'm going to just cover some broad topics to begin with so everybody can be on the same page. And then going forward, we'll kind of get into some more as we do some more of these webinars. So today the format is going to be what is digital currency? We're going to talk a little bit about the Gaap and book accounting, a treatment for digital currency. We're going to talk about a little bit about the IRS and tax accounting treatment of digital currency. I'm going to give you guys a quick demo of Gilded, and then I'll mention our partner accounting program and get into some Q&A at the end. So like I was talking about, we plan on making this a series going forward, and in future episodes, we're going to dive further into specific accounting topics surrounding Gaap and IRS guidelines, and we plan on bringing in experts and other guests. So what is digital currency? So digital currency for the newbies, digital currency is money created from code. It's a public ledger where peer-to-peer transactions take place with the ledger acting as the mediator. There's no middleman, there's no banks. The ledger acts as the final source of truth and eliminates the double spend issue. The very first digital currency created was Bitcoin, with the release of the Bitcoin white paper by Satoshi Nakamoto in 2008. The Bitcoin blockchain and Bitcoin, I'm sure, is what everybody's obviously, hopefully heard of. The Bitcoin blockchain is a public, self-run, self-governed record-keeping system, meaning, again, that it's free from government, bank, or outside party intervention. Now, how fast is this growing? Well, digital currency is beginning to be utilized by businesses across the globe. Whether they are accepting Bitcoin or crypto for their businesses, or investment firms are starting to invest in crypto as speculative assets, or companies building applications on the blockchain, it's really starting to become mainstream. If you want to know how fast it's currently growing along the same trend line as the internet did back in its early stages. Also, the government recently included digital currency in the first draft of the coronavirus stimulus bill that it drafted back in March. So they were going to send everybody their $1,200 payments via digital currency and give everybody a digital wallet. Obviously, that didn't, pass through the final bill, but the fact that they put that in the draft, I think really kind of tipped their hand as to how close and how ready they are to embrace kind of a digital currency throughout the US and throughout the globe. So I think it's going to be here a lot quicker than people realize. Now, look how fancy my slides are. You don't want to mess with that. So now, what is blockchain in accounting terms? So if you're still a little confused, think of it this way. To us accountants, I'm a CPA. I'm one of you. I am one of the people, been in the trenches, been with you guys. So think of it this way. A blockchain is a gigantic, huge, it's going to be huge, open, public general ledger. Now, there are private blockchains. That's a whole separate discussion for another webinar. But Bitcoin blockchain, open, public, general ledger, right? Just sitting in the cloud, whatever you want to call it, in the universe. So this open public ledger is free for anybody to participate in. By participate, I mean you can transfer value peer-to-peer on the blockchain. The general ledger, now what's key here is this blockchain is immutable and acts as a final source of truth regarding transaction information. So what makes this better than traditional transaction rails? 3 things. 1, speed. You can send transactions instantaneously on the blockchain, like pretty much like that. 2, cheap, low cost. You can send $1 million to India for like 10 cents. 3, transparency. All transactions are 100% transparent and can be viewed on the blockchain. Pretty powerful. So why is it important for accountants to get on board with this? Like, why do you need to understand this? Now that you understand its 3 benefits or its main benefits, think of the power this can have going forward. If businesses start transacting in digital currency, utilizing its advantages over traditional transaction methods, this will have huge implications. Think of a future where a business can transact 100% on the blockchain. This would create real-time access to financial data occurring instantly. You will also have accurately recorded transactions within a system without them being subjected to change, and the process will be fully integrated with your payment and cash management systems. So think about that. This is going to change accounting and auditing completely. Accounting will occur automatically, and auditing will be automated, verifying transactions in real time while producing real-time audited reports. There's already a accounting firm out there that has a real-time audit report for a blockchain company to verify the number of dollars held in the bank account that's being held for trust token. So already happening. So super powerful stuff, right? Now think about this. The day that we have this running at scale is the day that we can truly substantially reduce financial risk. Now, this is not the end of the accounting profession. I've said this before, this is an opportunity. It's an opportunity for accountants to eliminate mundane tasks, stop doing the monkey work, and provide focus your time and efforts on providing the valuable financial insights and analysis that companies truly want. So this is the end goal of where all this is heading. Currently, everybody in the crypto space, we're working on getting everyone comfortable with blockchain digital currency and working to onboard businesses to be able to take advantage of the speed, low cost, and transparency that blockchain has to offer. So how is crypto treated for Gaap purposes? Crypto is unique in that it does not fit into any existing asset class previously defined by accounting standards. For an entity that is not applying specialized industry guidance, if you're just using digital currency for a B2B transaction where you're going to receive digital currency in exchange for a good or service, the digital asset that's received, and real quick, digital currency, digital asset, cryptocurrency, we use these terms interchangeably. They have some slight variances. Some crypto truthers will tell you one thing or the other, but they're all the same for purposes of this discussion. So if you're using digital currency for a B2B transaction where you receive digital currency in exchange for a good or service, the digital currency received is accounted for as an indefinite lived intangible asset. And the revenue that you receive in the form of that crypto falls within the scope of FASB ASC 606, revenue from contracts with customers. The intangible asset recorded is then subject to impairment testing at the end of your reporting period. So you're probably thinking, wait, intangibles, like why intangibles? That's kind of weird. Well, one, crypto does not meet the definition of cash or cash equivalents, the accounting standard definition of cash and cash equivalents, as crypto is not considered legal tender backed by sovereign governments. So no cash. Two, it does not meet the definition of financial instruments or financial assets, as crypto does not represent ownership interest in an entity and does not represent the contractual right to receive cash or another financial instrument. So no investments, or not a financial instrument. Three, not inventory because it's not a tangible asset. So we're running out of options on the balance sheet. So the FASB is basically like, I guess intangible kind of works for now because it is an intangible asset. It's not tangible, and we'll kind of roll with that for now. So they've issued that guidance. I think they issued that back in 2014. Don't directly quote me on that. I don't think they've updated it yet, or I haven't seen any updates on it yet. So that's what it is now if you're going strictly Gaap reporting purposes. But this is what's currently causing a lot of differing opinions amongst accountants. Ultimately, my opinion is crypto is so unique. Currently, we're trying to fit a square peg into a round hole with like existing standards and existing guidance that's out there. Whereas I think we need to kind of take a step back and create like an entirely new separate asset class for this, and then kind of roll with it from there. So that's kind of how I think we need to tackle this. Now, it's important to understand that industry-specific guidance, though, is applied to, in this instance, I'm talking investment companies or miners. So it's not always going to be, it may not always be an intangible asset, depending upon the industry-specific guidance. Again, that's always fun to debate too. So how is digital currency treated by the IRS for tax purposes? Well, today, digital currency is treated as property with cost basis, gain loss, and short-term, long-term cap gains rules applying. Taxable events include selling crypto to, we call fiat, for new people, fiat means like traditional US dollars or euros, whatever your base currency is. So when you go from crypto to a base currency, fiat currency, that creates a taxable events. Trading crypto to crypto, so selling Bitcoin for Ethereum, that creates a taxable event. And like-kind, 1031 like-kind exchange rules do not apply. So sorry, you're nixed from that. They already tried to fight that and didn't fall through. Using crypto to purchase a good or service, receiving crypto as a result of a fork or from mining. For those of you wondering what a fork is, we're not talking like a salad fork. A fork is when a blockchain has a mixed consensus on how to proceed, and this creates a separate forked chain. Holders of the original token typically will receive an equal quantity of the new fork token. If you're still confused, we're going to go into that on a later webinar. no need to worry about that right now. Events not taxable include buying crypto, so going from traditional dollars to crypto. That's going to establish your basis. Donating crypto to a tax-exempt organization, gifting crypto, and transferring crypto from wallet to wallet. Now, the biggest pain in the freaking butt is dealing with cost basis and having to track cost basis of all your transactions in order to properly determine your gains and losses. Because crypto is treated as property by the IRS, checking my time here, we're good. You have to properly track your cost basis. You can use FIFO and specific ID to track your cost basis, but a lot of people right now are doing that manually, and it's a really big pain in the butt because it has to occur for every single transaction. So you can see where that gets messy and a lot of fun. And everyone who's filed their taxes in 2019 already knows that the IRS is asking you on Schedule 1 if you sold, sent, exchanged, or otherwise had any financial interest in crypto in 2019. You have to check the box yes. Do not check the box no if you had any crypto financial interest in 2019, because if you check the box no, that's fraud. You can go to jail. Just don't do it. Boom. So currently, as I said, a lot of this is being performed manually. And a lot of traditional accounting systems don't support cryptocurrency. Reason being, it's really hard to create a system that tracks crypto transactions. That's where Gilded comes in. So our application makes all the accounting challenges super easy for you guys. So let me give you a quick demo of how this works. Hopefully everyone can see my screen. All right, cool. So we are currently in the Gilded in your Gilded profile. So you create a Gilded profile, you log in, you go to your accounts view. On your accounts view, this shows all of your crypto wallet addresses. Crypto wallets, for new people, just think of that as basically like a bank account for crypto. So each wallet represents a different bank account. You can click on a wallet, and within the wallet, you can see your current holdings that you have. So here we have Ethereum, the current spot price, current holdings that you have within that wallet. Now you can, from there, you go to your activity view. The activity view shows all of your transactions in your crypto wallets that you have. I like talking about my hands, apparently. It's kind of fun. Sorry. The activity view shows all of the transactions that you have on all of your wallets that are hooked up to your accounts within Gilded. So all of the transactions ins and outs are shown here. So let's check one of these transactions. On May 22nd, we had 0.009 BTC coming in, and it hit our Ledger Nano account. Now, this one had multiple parties associated to it, but if we click on another transaction, you can see that there's actually a counterparty associated with it. So within Gilded, you go to your contacts view, and you're actually able to associate a wallet address, because a wallet address is a string of numbers that looks like that, very ugly. You're like, who is that and who's sending me money? So in Gilded, you can actually associate a wallet address to a name and contact email and make it easy for you to understand, like, oh yeah, this came from PX test, etc. So yeah, so back to our transaction. You can then classify your transaction based on the transaction type. Checking time, we're good. So you're gonna label the transaction type as income, expense, trade, transfer, or whatever the transaction was. By labeling it, then that will create the proper journal entry that gets recorded into QuickBooks. So we're gonna sync this into our QuickBooks account. And while it's syncing, I'm gonna show you guys how our QuickBooks integration works. So we already have our account obviously linked up, but you would link up your QuickBooks account, and based on the transaction type on the left within Gilded, you'll label which chart of account here on the right you want the transaction to be recorded to. So this dropdown is actually pulling in your chart of account straight from your QuickBooks account. And you can go ahead and label which chart of account, which GL account you want the transaction to be recorded to. So it looks like our payment has synced. And we're gonna go to our QuickBooks account real quick. And I'm gonna show the most recent journal entry. Hey, look at that, it works. Live demos, love it when they work. So this journal entry was automatically created when I hit the sync button, and it shows the amount being recorded into income, and we're debiting our BTC intangible asset account. We include some additional transaction details within the description to be able to reconcile the transaction back to Gilded. So that's the accounting portion. That's all I'm going to show you guys today. So lastly, in order to help you, my fellow CPAs, my accountants, all my friends, I'm going to be giving back. As accounting professionals, we are the trusted advisors to businesses. And at Gilded, we believe accounting is the key to adoption of digital currency amongst businesses. This can be a new advisory service for your practice, a new revenue stream, and learning about it now puts you ahead of the curve. At Gilded, we'll provide additional educational materials and invite experts in the industry to share their knowledge. So we have a new accounting partner program where accountants can get access to a premium account for free, $0 free for you, giving back because I love you guys. So visit our digital asset toolkit for accountants on our website where you can access the program and get more details. And that is all I have for you guys today. Questions, fire away. Look at that, 25 minutes, leaving 24 minutes, leaving 5 minutes for questions. Can I share the link? Yes. I think I can. It's also, if you just go to gilded.finance, you guys want me to just play music? Joey, will I have this webinar recorded to share with other accountants? Yes, you will. We are sending out the recorded link after I'm done. Also, how do I start accepting crypto clients? Anonymous attendee. Anonymous, I like it. Easiest way is to reach out to us and we can get you set up on crypto wallet addresses, the easiest ones to use. And then we can start having you basically send invoices or utilize the invoicing and accounting tool within Gilded and go from there. That's kind of there's a lot more to it, but that's the easy, reach out to us, go to our website, just type in the chat bot and we're going to help you out. Hi, arrived late and missed, but you recorded, right? Yes, Daniel, it's recorded. We will send out after we're done. What are you going to cover next webinar? What do you guys want me to cover next webinar? Let me know, let us know. Shoot me an email, joey@gilded.finance, if there's something you really want to learn about. We're gonna keep this open and fun. Maybe bring on expert guests, really dive into fun blockchain accounting stuff, but keep it fun, keep it light. Also, great job. Thanks, Vance, appreciate it. Hi, arrived late. Yep, recorded. We will send, yep, great. Is your software used by all sizes of companies? Yes, it's good for anybody, and we have pricing tiers based on the number of transactions that a company is going to be sending. Oh man, we got up to 23 participants. Awesome. Yes, Raina, CPE credits. Yes, if you guys want CPE credits, that's something we're considering as well. Doing this on either on basically one of those free CPE websites, either My CPE or CPA Academy or something like that, and make it a 50-minute session so everybody can get a CPE credit and get some more people. Will automation kill accounting? Anonymous, I like it. So automation will not kill accounting. As I mentioned before, it helps you eliminate all of your mundane, detailed tasks and makes your life a lot easier as an accountant to be able to provide financial insights, analysis, advisory services to businesses, and that's really what they want, right? I mean, when I did an audit, no business wanted me there. They always wanted to get rid of me as fast as possible. So because an audit to them provided no value, just produced financial reports. So yeah, being able to provide value to a business would always get me excited. So I was always looking for opportunities to provide value while I was performing my audit, and that's what my clients like the most. If I tested Gilded for crypto invoicing, works great. Yeah, I think I haven't seen any other crypto invoicing tools out there necessarily. Ours is like pretty simple. Our goal is to make it super simple for people to be able to use and plug in. One of the problems with crypto and blockchain right now is you have to really understand how crypto and blockchain works and able to use it. And it shouldn't be that way, right? So like when you go drive your car, like you grab your keys, you get in your car, you push the start button. You don't have to understand how an internal combustion engine works in order to get in your car and drive. So we want to make crypto the same way. Like we don't want to make it to where you have to understand how wallets work, sending, receiving, all that. We want you to be able to log into Gilded, send the invoice, receive it, boom, it goes right into your accounting system. It reconciles. It's super easy, super simple. How do I teach my clients about digital currency? So this webinar, these webinars going forward is a start. The AICPA has produced some really good materials. I can send you guys a link to that. I think if you just go to their digital asset, they have like a digital asset toolkit or webpage. We have a digital asset toolkit. Go there first before you go to the AICPA, and you can learn. We have another minute. Can you briefly discuss security of Gilded's crypto invoicing system, maintaining privacy of wallets? So we're a non-custodial solution. So no, we only read the transactions. We're a read-only solution. We read the transactions. We don't actually pull the transactions in. So basically your wallets, crypto can't get hacked through Gilded because we're read-only, non-custody. You actually custody your own wallets. What else does Gilded do? So we do invoicing, which I have not, man, anonymous attendee, killing it. Love the questions. So we do invoicing, which I did not cover. We'll cover in a separate webinar. And we can create the entire invoicing AR process. We can automate that. So if you're trying to get into digital currency and reap its benefits, we can automate the process from CRM system, basically like closing a deal, creating an invoice, flowing that all the way through to basically your accounting system where you're reconciling the payment. We can automate away a lot of that. So open-ended question, but in my 30 seconds I had to answer, that's the answer. Anyone else? I will answer one more. Daniel, yes, but with ETH chain issues is that if the sender knows your wallet, they can review all history for the wallet. This then leads to just using a new wallet every time, awkward or dedicated ETH address. Correct. Right, that's the issue with ETH chain. However, we know that UI, I think I just partnered with Microsoft. It's not Nightfall anymore. It's called Baseline, where businesses will be able to transact privately on the Ethereum blockchain. That is going to be launched. Paul Brody talked about it in his EY webinar. So that's going to be huge going forward for businesses to be able to adopt crypto and utilize. We're going to be hopefully doing some stuff with Baseline in the future so that we can integrate with them too, or do some projects with them too. And then you'll be able to send invoices anonymously, privately on the Ethereum blockchain through Baseline. That's going to be tackled. That's 30 minutes, guys. We killed it. Thanks for joining. I think this will play. No, yeah, it's going to play. That's going to be the outro music too. Thanks for joining. Yes, Baseline. It's called EY Baseline, Daniel. I will reach out to me. We can talk. EY Baseline. Google it. Thanks for joining, and we will see you guys next time on Blockchain for Accountants webinar. Hope you guys enjoyed it. Try to keep it light and fun and entertaining. And we're going to go into further detail on the next ones and bring on guests. So appreciate it. Thanks for coming out.